What is up, you guys? Thanks so much for joining me today. It's your boy, the Finance Bro, and in this video, we're going to be taking a look at shares of Apple, where they're trading today, and if this is a good entry point for investors over the long term. As always, this video is not investment or financial advice and is solely for entertainment purposes. All values that you'll see within this video are as of market close on April 22nd, 2026. So let's dive right in here. You can see over the past 12 months, Apple shareholders have received a generous return of 37.35%. You can see that shares are trading not too far off their 52-week high. They are trading above both the 50 and 200-day moving averages, and there is a long-term technical buy signal still on Apple, where you can see that 50-day moving average, that's that green line, still trading above the 200-day moving average, which is in the orange line. Quite remarkable return for such a large company. And I want to touch on a few key items here. You can see there's 48 analysts that cover Apple. They have an average target price of $301.62. You can see that implies a 10.5% upside from where shares traded on market close on April 22nd, 2026. And I do want to mention that Apple is reporting on April 30th, 2026. We've had a significant rally in the names, and after Apple reports, we can see revisions from these analysts, whether it's on the upside or downside. But stay tuned, as that target price is subject to change over the next week. But you can see the EPS growth through 26 and 27 of around 11%. Quite remarkable. Remember, Apple was the world's most valuable company for the longest time. And also, just want to mention they are still one of the world's most valuable companies to date. And to see this EPS growth with such a large name is quite remarkable. There is an error in the sales growth percentage there that is indicated at the bottom right. I'll touch on that later on in the video, but I want to see the profitability and the underlying business of Apple, and they have phenomenal gross margins, and you can see those gross margins have actually increased significantly over the past 5 years. Over the past 12 months, they have had gross margins of 47.3 and net margins also on that 5-year trend on the upside of 27%. This is one of the most profitable companies in the world and one of the most profitable product driven companies in the world. And we'll see that in their segmentation of Apple's business later on. But when we look at the valuation metrics, just want to point your attention to the forward PE at 30.4. That is not actually overvalued for Apple. And you can see that here over the past 5 years, on average, the forward PE has been 27.4. At 30.4 right now, we're not too far off. And when we look at Apple on the 10-year average, it's actually trading in line to its long-term valuation. The price of sales is a little higher than what we want to see, but again, not trading too far off its 5-year average as well. And like we saw before, we are seeing profitability ratios for Apple looking outstanding, especially over the past 5 years from 2020 through 2025. You can see those gross margins, the operating margins, the net margins. But what's also important is the return on assets, return on equity, and return on invested capital, all significantly jumping and trending on the upside over the past 5 years. And Apple is one of the most, if not the most, prudent allocators of capital to get the best return on that investment for not only itself, but for shareholders through share buybacks over the long term. And also, operational efficiencies have exploded post COVID, and there's been a few culture changes throughout Apple and the way it operates, and that's in turn led to more positive and happier employees, leading to more output and productivity for Apple. And here I think it's important that we look at the valuation metrics relative to Apple's peers in Alphabet, Microsoft, Sony, Nintendo, and HP. You're looking at those forward and trailing PEs trading significantly above. Here, I really want to focus on Alphabet and Microsoft. Sony, you could just see there in the PE over the past 12 months, actually had no earnings. Not entirely sure why anyone would want to invest in Sony, a company that's been around for so long, yet over the past 12 months has earned essentially nothing in earnings. I know there could be accounting practices going on in there as well, but Not something we want to see. We'd rather want to focus on the Alphabets, the Apples, and the Microsofts of the game. And when we look at even the PEG ratios, you can see that both Alphabet and Microsoft, especially, are trading cheaper than Apple. Quite remarkable, but the price of sales of both of those, Alphabet and Microsoft respectively, are higher than Apple's. And gross margins of these companies are phenomenal. Apple is trailing in both the gross margins and operating margins, and also the net margins there as well, relative to Alphabet and Microsoft. Mind you, that Microsoft has the Azure business and Google has its Google Cloud division, and these are very high margin businesses, whereas Apple is more product driven and has in turn, through its AI development, actually led to more partnerships than investing in data centers and developing their own AI. And I believe that financial prudence has actually been beneficial for the company, like we saw on the return on assets. And you can see that there in the far right bar graph. Apple does have the most significant return on assets, the most significant return on invested capital relative to my apologies, Alphabet and Microsoft. So, through that financial discipline, Apple is one of the best allocators of capital for shareholders. And like I was saying, Microsoft has its Azure business and Google Cloud is there for Alphabet, which are very high margin businesses, and Apple is a more product driven business. And you can see products make up almost 80% of its sales, with the iPhone making up roughly 60% of that. And what's important to see there is on that graph, you see those green dots, which is the year over year growth. And what's funny is the iPhone growth. And ever since really the iPhones come out, people have always been wondering when the downfall of the iPhone will occur. I'll mention something in the next segment here. In the next snippet, you'll see the geographic breakdown and how the iPhone is actually even taking market share from Samsung in its own backyard. But iPhone growth is still its bread and butter, and we're still seeing that projected to continue. But we're also starting to see the services business grow and have that future projected growth. You can see that trending upward over the past 3 years and projected to continue to trend upwards in the years to come. And that's beautiful because that is a very high margin business. And like we saw, Apple is trailing both Alphabet and Microsoft in certain margin metrics. So if we're able to operate more in a high margin business, we should see that transpire in its reports going forward. So we do like to see that services are growing and are becoming a larger segment of the overall revenue for Apple. And like I was mentioning there, just at the bottom, in terms of Apple taking away Samsung's market share in its own backyard in the Republic of Korea, and you're seeing that trend actually up over the past 3 years and having a 4% change year over year. Apple, it's essential for Apple to continue to grow in its international markets. Apple is a true multinational corporation. Only really a little bit more than 1/3 of its revenue comes from the US alone, and is always going to be a large segment and should continue to grow over the long term. Now, geopolitical issues and other factors have had negative impacts on its revenues in mainland China, and you can see that declining 10% almost year over year and trending downwards over the past 3 years. But as well, I want to mention the EU and Asian nations are very important for Apple to have that growth, but India as well, with the largest population and also 25% of production, and we'll touch on that in the next snippet. 25% production is going to India, and if you're able to capture more of that market share and capture more of that youth in India, with its massive population, you should see, if they're able to execute accordingly and have these continue to trend upwards like we've seen for the past 3 years and its projected growth, then we should continue to see bottom line growth for Apple through larger revenues, more sales, increased margins, and hopefully better returns for shareholders over the long term. So there's a few key points here I want to mention on Apple, and one of the most significant shifts for the company is the confirmed departure of Tim Cook, who's set to step down from the CEO role and move to the executive chairman role in September of 2026, John Turnus, who is currently the head of hardware engineering, is going to take over Tim Cook's role as CEO. Now, this could signal a pivot from Cook's operations heavy focus back to a more product driven, hardware centric philosophy. Now, this could be good or bad depending on how you look at it. 80% of Apple's revenue does come from its products, 60% of that being the iPhone. And if you're able to focus more on your bread and butter, you can continue to have revenues and sales grow. But those are low margin businesses that can continue to put pressure on margins if we have costs rising to produce those products. And like we saw, services are growing and they are high margin businesses. You look at Alphabet, you look at Microsoft margin metrics that we just looked at, they have high margins because they operate a service segment rather than a product segment. So if you're having a CEO that is more product driven and not focusing on the service, now we're just being theoretical here, and that's not the case of what John Turnus is going to do. But bears are indicating that this can be bearish for the service segment of Apple, which really time will tell, and nobody will really know until that plays out. And like we mentioned, Apple doesn't really focus on internally growing its AI through AI data center buildouts and investing heavily compared to its Mag 7 peers, instead focusing on partnerships. And one of those partnerships is with Google Gemini's, which is Google's AI. And with the total overhaul of Siri, this partnership, having Gemini run Siri, should make her or he more conversational and capable of multi-step tasks across apps, hopefully improving user experience and in turn leading to more stickiness long term for Apple users. And with Apple sticking to its privacy first brand by processing most AI locally on the device, this will require more RAM. So for the iPhone 18, there may be a potential jump to 12 gigabytes of RAM to handle these privacy features. And this should be a groundbreaking, revolutionary 18 months for Apple. They're releasing the iPhone Fold. Again, there are rumors that this could arrive as early as September of 2026, likely featuring a design that unfolds into a 7.6-inch tablet. Apple is also reportedly developing non-display smart glasses, kind of similar to the Ray-Ban Meta glasses, focused on AI, cameras, and audio, with a preview expected to come in late 2026. And after years of resisting, Apple is actually expected to introduce the first touchscreen OLED MacBook Pro with M6 chips in late 2026 or early 2027. Now, a problem that we saw in previous videos, like Microsoft having supply chain issues, shrinking its revenue and margins, Apple is diversifying its supply chain. Like we mentioned, Apple has successfully moved about 25% of its iPhone production to India as of early 2026, which significantly reduces its reliance on China, mitigating any geopolitical risks, like we saw in that geography breakdown. Mainland China has had a significant decline in iPhone sales, and it only makes sense for Apple to diversify outside of the Chinese mainland. And there are rising costs in many of the inputs for the iPhone, the MacBook Pro, and so forth. And they're introducing their more financially friendly options throughout 2026. And if you're producing lower cost products, which as consumers we do enjoy, but from a business standpoint, if you're trying to produce that at a low cost and sell that at a low cost, but your costs are actually rising, your margins will shrink. And hopefully, we don't see margin shrink or revenue shrink. But again, time will tell. And like we saw there, that Apple is a true multinational corporation. They are caught in geopolitical crossfires, whether domestically, foreign, or so forth. And I think it's important that Tim Cook stepping into the executive chairman role allows him to be a more politician per se, and letting John Turnus really run the day-to-day operations of Apple. Now, guys, thank you so much for making it to the end of the video. I do appreciate it. Again, this is not investment or financial advice, solely for entertainment purposes. Only time will tell how shareholders will be rewarded for holding Apple. Thank you so much, guys. Please hit that like and subscribe video and stay tuned for the next video.